One. Hey guys and gals, it's Logan Freeman and
Alex Olson
with Clemens Real Estate coming to you live with another episode of the Multifamily Minute. Well, I'm going to toot my own horn here for a little bit. Alex, did you see I got the Q2 Power Broker here in Kansas City?
That's outstanding, man. Congratulations. Well-deserved.
Well, I tell you what, I would not be able to do it without you, my friend. So, we need to get you becoming the next power broker in Kansas City. It's a really cool honor. We got the opportunity to work on a really cool deal. And I think the deal really kind of made me the power broker, so to speak. But what I want to highlight there is not necessarily tooting our own horn, but is just saying the fact that we are in the know. We are here working hard for our out-of-state investors, our clients, buying and selling properties. We got our fingers on the pulse here in Kansas City. Alex is always out there sweating, looking so fly with his watch and his sunglasses, just rocking and rolling, looking at off-market multifamily deals. And that's why we're here talking to you today. So I guess I will pat myself on the back just for a moment or two. But look, during our health crisis and pandemic, that's what really made me the most proud of that was we didn't sit back on our laurels and sit on our hands and not do anything. We're out there beating the bushes, finding deals, putting stuff under contract, working through the due diligence. There is no easy way to go about that. We just did it. We took action, and we're still doing it for our clients. So excited about everybody that's watching this video. We want you to be our next success story. Buy a nice, awesome property here, and your property can be showcased on Alex and I's LinkedIn, and maybe you'll have the quarter of the deal of the quarter for Q3, I guess it would be. So super excited, though. We've closed a couple transactions the last 2 weeks, closed a 41-unit apartment complex. That was one of my listings from a client of mine here in Kansas City. And then last week, Alex closed 18 units for another out-of-state 1031 exchange client over on KU Med's campus. So very cool, very exciting stuff all through COVID, and we're here to work for you. So, Alex, I want to talk a little bit about some market commentary because, I think this is, if anything, writing this every single week helps you and I just kind of aggregate the data and put it in a way that's clear and concise and compelling. And everybody keeps asking us, are people paying rents? And every single month we say, yes,
absolutely.
They are. So August rent payments hit 79% by the National Multifamily Housing Council. They have a rent tracker. What's really cool about this is let's give you some stats on this real quick. And then we're going to dive into a hot take or a hot topic of mine as well. Right now. But more than 79% of the U.S. rental households have made rent payments as of August 6th, according to the latest report from the NMHC. And that comes amidst all the negotiations that's going on in Congress over the latest stimulus relief package. And in days after the President Trump announced an executive order surrounding evictions and unemployment benefits. So 79.3% of rental households made full or partial rent payments in the first week of August, which is a 1.9 percentage point decrease from the same time last year, to be expected, but a slight increase from the same time last month, where right now we were at 77.4%. But Alex, I thought that the unemployment benefits ran out. How do people have money to pay rents? Or are the naysayers just going to say again, oh, well, they probably still had the money from July to pay for August. Now are they going to pay in September? Like, what is your take? And curious to hear your thoughts on that.
Well, I think it's important to understand the market dynamics of the employment world. And people tout unemployment rates being very high, which, don't get me wrong, they're historically very high. However, still 90% or so of the population is employed.
Yeah.
And I would say 99% of the population that lives in housing actually wants to pay their rent.
Right.
So, I mean, people know that that's the right thing to do. And yes, there are a few bad apples that the media latches onto of people that refuse to pay rent. But I'd say here in KC, we don't see much of that, as we've highlighted several different times.
Sure.
And so if you're in the market to buy real estate, there's no better time than now. It's always about finding the right deal, not making up excuses to not buy a deal.
Yep. Not only that, so rent payments are coming in good. The average U.S. rent in July was $1,460, which is up $2 from June, with year-over-year rent growth remaining negative, but not for Kansas City. Those negative reports are, places like San Jose, San Francisco, -5, -4.1, leading the way. Kansas City, positive 3.5, right behind Phoenix at 4%. So it's nice to see rent growth, though, stagnating and not continuing to drop, right? So that's really, really important. And that's across the United States. So that's really, really a good marker, I think. The second thing, but again, look at our commentary from last week, because that's where we really dove into where Kansas City was and why we are beating the national average. So the other piece that I continue to not argue, but dialogue with people about is I need post-COVID pricing. Okay. What does that mean? And how do we justify it? Right. And they say, well, we justify it by the risk that we're taking right now. But what's happening is there is perceived risk from buyers that has not been obtained from the seller's perspectives. And so in our commentary this week, and I don't know if we can get all of this in the newsletter, you might have to just take some snippets, but I wanted to document what the market risk premium is. And when you think about a capitalization rate, okay, a risk-free rate, which is typically the yield on a long-term government bond, sets, hey, if you invest this, which is probably at 0.3, whatever it is, your return, you're not going to lose your money. Okay, that's the only way we can say, hey, you're not going to lose your money, but it's also not going to grow. But then there's a line, right, and it goes up, and so at a kind of a gradual level, and between the market return and the risk-free rate lies risk, usually somewhere between 3 and 9%. And that's where your capitalization rate comes from. So what you have to think about is, how do I make risk or decisions based upon risk-adjusted returns, okay? And the way that we do that in Kansas City is obviously understanding the economic and the demographic markers, but also looking at different locations, submarkets, asset classes, and management companies. This is not talked about enough. So, the beauty of commercial real estate is that there's an investment strategy for investors of every risk tolerance. Commercial real estate investment strategies fall into one of 4 segments according to risk, quality, and potential return. You got your core offerings. Don't call Alex and I if you want a core offering. Core plus, we do some of that, not much, a little bit. Where we play at is value add and opportunistic. If you want to understand the definitions of all of those, go Google it or call Alex and I, and we can walk you through that. Here's the crux that nobody really talks about, and this is what is really important to me, is, okay, if you can take an value add or an opportunistic deal and you can put it into a recipe that's mitigating your risks and giving you the same type of risk profile as a core and a core plus strategy would, then that opportunity that's a value add deal or opportunistic deal is essentially less risky, but with higher return. And management is the way that you go about doing that. So making sure that you connect with us, talking about the management and the value add strategy, the business plan. Okay, so are you going to adjust rents to match the market rents, add amenities and capital improvements, improve your screening to acquire higher quality tenants, making cosmetic upgrades to enhance the curb appeal, improve your marketing, improve management and property management for more efficient and effective operations. Those are all great things, but not every single one of those 6 strategies works on every single deal. So what you have to do is consult with myself, with our team here, to allow you to look at your asset or an asset, define which type of asset class it's in, core, core plus, value add, or opportunistic, and then how do we mitigate for the risk, right? So this is exactly what we do on our own acquisitions. We play red team, blue team. So one team is advocating for the deal, and another team is, tearing the deal apart. You need to do that. Have Alex and I do that with you so we can help you understand the benefits and the risks of these acquisitions. And so anyways, there's a lot more commentary, around how to think about the market risk premium, and then how to, mitigate for your risk, and also how to make sure your margin of safety is a little bit larger on these deals. And that's why we're getting deals across the finish lines, because we've been through enough transactions to say, okay, in this transaction, here's our risk. How do we mitigate for that risk from day one, instead of getting under contract and knowing that risk is there and then pushing through that risk without addressing it? That's what I call pushing through a yellow light. We don't do that. We get it out up front. Alex and I don't have enough time to mess around with a deal that's not going to get to close, right? And so if it's not going to, let's get out of it quick, okay? But let's try to figure out what roadblocks we might have throughout the transaction process, what risk is presented, and then if we can go mitigate for that risk, fantastic. And if not, then we need to get it priced in to the deal. And you, Mr. Investor, Mrs. Investor, because we did just close a transaction with a lovely lady, you have to price that into what you're going after. So I'm going to get off my soapbox talking about market risk premiums and risk adjusted returns. But the last thing I will say is, what's the cost of doing nothing? What is the cost of doing nothing? You stuffing that money under your mattress with historical inflation. If you stuff $1 million under your mattress, 10 years from now, you will have $776,000, 426 cents. Okay? So anyways, I said that wrong. $776,426. There you go. I don't know if you want to have 426 cents. That would be
$4.26.
Yeah, that'd be a lot of pennies.
Yeah.
So
coin shortage.
Yeah, there is a coin shortage. There's another thing that's going on. So long story short, when we're sending you guys deals and we're talking about multifamily, triple net lease, acquisitions, properties, investments, we're thinking about these from the standpoint of the risk-free rate. The capitalization rate is the amount of risk a market's willing to pay, and you're willing to get it for a return. In that, we're thinking through, how do we mitigate some of this risk? How do we solve for it? How do we price it in? And that's what we want to help you do. And that's why you're talking to power brokers, not just guys that are just trying to get stuff across the finish line. We will do that as well, but we're not going to push through yellow lights to get it done. With that being said, Alex, we got a couple new multifamily deals that I want to talk about. And I'm going to let you do some of the talking, and maybe we'll start with a transaction on the Kansas City Country Club Plaza, which is the premier dining, entertainment, and living area in Kansas City. I own some real estate around there. So does my friend Alex. And I think that you should too. So let's dive into it, Alex. What do we got here this week?
Yeah, we've got an awesome 10-unit apartment building literally on the plaza, on the Country Club Plaza. As Logan said, it's a premier everything in Kansas City. It commands the highest rent rate for not only residential, but also commercial space, retail, office. It is the most expensive pieces of property in the city, and on its cost per square footage basis. And this building has been completely gutted, completely remodeled, and is probably still under rented compared to what I think it could be. And it's an off-market deal that is available through Logan and I, but it's a great piece of property that, if you're looking for something, I was even talking about this before, but if you're looking for something that you want a 1031 exchange into as an appreciation piece in Kansas City, this is an excellent property for that. You can also cash out, refi, still cash flow, all those kind of things. It's a relatively great price point. So definitely consider that.
Awesome deal. So, this is what we call a little bit of a trophy asset, right? I mean, this is an asset that is going to appreciate. It's never going to be vacant. You're going to get $2 a square foot on your rents, which, think about 1,000 square feet, you're talking about $2,000 a month for one of those units. So it's definitely not our typical, what I would call, value add type of deal. But if you're doing a 1031 exchange and you're familiar with assets that stay 100% occupied with great tenants in a great location, that's your deal. So thank you, Alex, for that.
Mm-hmm.
All right, let's jump into our other opportunity out in your neck of the woods. Tell us what we got, man.
Yeah, I was out in Lee Summit the other week. I don't know what it was, a month or so ago, bouncing around outside. It was hot in there, and now we've got a hot deal to bring to you, I think partially from that.
Yeah.
So anyway, it is, let's see, how many units is that? It is, it's available for $3.4 million. And you can get that with a great piece of property. It's in a good part of Lee Summit. Lee Summit, the market in general is similar to a Johnson County, except for you actually have some cash flow here. And your value add here is that you can increase rents a lot. I think it's well under rented. So you've got a lot of room for improvement on making the property stabilized. There's a lot of opportunity in Lee Summit, and this particular property is one of those that's fairly close-knit. And so I think your bang for the buck is going to be high. And especially with the purchase price, we don't have a lot of things seemingly in Kansas City where it's between $3 and $4 million.
Yep.
And so this is a great one where you can snag some units and also have another appreciating asset that also cash flows.
So tell us a little bit about the way that this transaction is going to have to go down, though. So it's a little bit different than our typical straight-up deal. So what are the intricacies around this deal? What's the value add on this opportunity? And just so we're upfront, like I said, there's different things with every type of deal. But let's walk through the intricacies on this transaction or this project.
Yeah. So the first thing is that the loan must be assumed. So if you're going to go in and buy this property, which is a great deal anyway. But if you go in and buy it, you got to assume the loan, which is no big deal. Easily assumed both through Fannie and Freddie Mae.
And we've checked on that, by the way.
Yep, we've checked clearance on that. And then the second piece is there is a prepayment penalty that the buyer is going to have to pay for. Doing both those things may seem like a big obstacle, but for Lee Summit and this size of property and this condition, is a good deal because of the value add. There's a few of the units, maybe 17 units of the 50 plus units have been touched, and meaning that they've had some kind of renovation to it, but the remainder are completely free to, get to your market rent. This is a location you can get to market rent with nice finishes in it. It's got a great little pool out front. Lee Summit has top school district in the metro on the Missouri side. So your value here is, everybody wants value add. This is a value add property. It's going to cost you a few dollars to get it, but the value really is there.
Yep. I totally agree, man. Well, we're running long already. And so, again, we showcased some triple net lease properties last week. Those are always an interesting opportunity, especially right now, when we're thinking about the risk-free rate and the spread. Right? The spread on those deals are a little bit larger than they would be on a multifamily deal right now. So keep the triple net leases in mind. A lot of those deals, as you guys see, there's more red showing up on those deals, meaning on our sheet, meaning those things are going under contract. So, don't take our word for it. I mean, things are transacting in our marketplace. And so I think that if you're interested in a trophy asset in an area that's going to, you buy right now, 10 years, you probably sell for, what's Bill doing over there? I mean, I know he's had it for 20 years, but he bought it, $33,000 a unit and is selling it $90,000 a unit or 100 something units.
Yep. Yeah, over 100 a unit. Yep. Yeah. 110, 120,000 unit.
So that's the same thing you can do on this deal. You just got to be patient. And then if you want a more traditional 50 plus unit, value add multifamily deal, we've got the Lee Summit project. You do have to assume that loan. So don't try to negotiate that with us because we already tried. So you can't do that. They're not going to do that. But if you can make that work, if you can raise the equity to make that work, I think that deal will be really good. Alex, any closing thoughts as we get started on our crazy busy week this week?
It's going to be a busy one, man. We got some deals closing up here soon the next several weeks, so we'll be busy.
Awesome. Well, guys, thanks for tuning in for another Multifamily Minute. My little boy Ezra is letting me know that it's time to get off.
Right on cue.
See if you guys can see him. There he is.
Poor guy.
Yeah, he's just hanging out with Dad down working. So, anyways, excited about the opportunities, excited about Kansas City. If you want to talk about the market, talk more about how we're mitigating risk for our clients, reach out to us. Go fill out the BRSS buyer intake form, which Alex always puts right on the bottom of the video. You can go click that. Those are the folks that have our ears. So thank you guys so much for tuning in. Alex, I'll see you again next Monday.
All right. See you, man.